Hello, you are welcome. This is Mike Akirele, and you are listening to the voice of Awesome Mike. Yes, I welcome you to this video tutorial. This is week one of cryptocurrency trading advanced class. This is the advanced class to the free masterclass I did for you, which held for 2 days actually. So I welcome you to this class. I'm not going to waste much of your time. So because I've already, and I'm not going to be going deep into theory because I've already given you the theory aspects in the free class. So if you have not read that, you can just request for it or go back to that class and read it through. It's still there on the group. All right. So this is practical. So um and we are definitely going to be dealing with practicals. So let me take you through to um the content for week one. All right. Let me take you through the content of week one. So in this week one, I am going to be showing you the introduction to cryptocurrency trading, how to read candlestick patterns and the charts, how to draw support, resistance and trend lines, then getting started with indicators, how to use indicators for entry or exit, combined with other tools, all right, with combined with other tools. So without wasting any of your time, so we are just going to go into lab now and begin the practical right away. So let's head over to the class. So here we are. Okay, before I even go into the lab, I think I need to explain and introduce you to cryptocurrency, most especially for those of you who are beginners. So I'm not going to talk more on that as well because I've done major justice to it in the cryptocurrency free masterclass I had with you. So but briefly, introduction to cryptocurrency trading. So this cryptocurrency is just the digital money, the money that we spend on the internet. All right, and it can also be used for payment of goods and services. For example, you realize that most of you that subscribe to the advanced training, I also collected uh Bitcoin, USDT, and other peers as well. So what I'm saying is that it serves as an exchange, all right, for you getting this knowledge and for me getting your commitment fee. All right. So the type of money that we can spend on the internet, for exchange of goods and services, and the underlying technology behind it is the blockchain. What is the blockchain? The blockchain is a public ledger. All right, it's like a database where transactions that happen on the digital currency are being stored into. And talking about blockchain, anything stored on blockchain cannot be altered. It can never be deleted. It cannot be hacked, and it cannot be forfeited. Right? It can't even be edited as well. Yeah, that is why any project, stored, or worked on, dropped on blockchain cannot be edited. It be improved on another version, you understand, but the one that has been stored there cannot be edited because it has uh, uh thousands, millions of nodes, that is, we call them miners, all right, around the world that do verify transactions, you understand. So that is why it is very difficult to hack the blockchain. So that is just that's about the blockchain. And talking about cryptocurrency, the first cryptocurrency ever built is Bitcoin, right? That is why it is their father, in such a way that anything that happens to Bitcoin also happens to other other arts, that is other alternatives to crypto to Bitcoin. You know that I told you that anytime Bitcoin coughs, all other arts also sneeze. Here is a sneeze. So that is why when you see Bitcoin dropping in price, you see other hearts, they will bleeding, you see them in blood. So that is that on the cryptocurrency trading introduction. So the next thing will be how to read candlesticks pattern. All right, so that is what I'm going to be going into right now. All right, so welcome to the second subtopic, which is how to read candlesticks patterns and the chart itself. So before you start trading, you need to understand the basics of candlestick patterns. All right, you need to be able to identify some patterns so that it will help you to form your both entry and exit positions. And candlestick patterns are very important aspect that you need to understand if you don't want, if you actually want to you know, become a profitable trader. All right, if you want to make more profit than losses. So, and that is what we are going to be going into right now. So as you can see, uh we have different types of candlestick patterns, and I'll be starting with the basics with you right now. So the first one here is, you can see we have three different columns there. We have the candlestick's name, we have the bullish or bearish, and we have what it looks like, that is their patterns. All right, so that you'll be able to identify them on the chart. So the first one here is spinning top. All right, so as you can see, the spinning top is actually neutral. It is neither bullish nor bearish, and this is how it is. All right, they can be you can see the part whereby they have the part of the body whereby it looks like pain at the top is known as the upper wick, while the part at which it looks like pin at the bottom of the candle body of the candlestick body is known as the lower wick. All right, so the other part is known as the body of the candle. So you can see they looks like what you can spin, that's why they call them spinning top. So they are neither neutral nor they are neither bullish nor bearish. They are neutral, they are just like that. And it doesn't represent anything, it's just a pattern that it forms, and nothing happens. So now look at this. The next one is doji. All right, we have different types of doji. Actually, we have the long leg doji. This is long leg doji, this one I'm hovering on. We have the dragonfly doji. This one is dragonfly doji. We also have the gravestone doji as well. All right, it's just like long legged doji, but it's more of its own wick is long. All right, it's even sometimes even longer than this gravestone doji. All right, this one is actually the gravestone doji. This one I'm hovering on. So but the long leg doji is longer than this. And so the way they are actually, it is known as neutral here, but on some advanced books, all right, anytime you see this doji at the end of a downtrend, all right, anytime you see them at the end of a downtrend, they are actually going up. All right, it means that there's going to be a price reversal, because most times they are known as either supply or demand candlesticks. All right, candlestick patterns. So so if you find them, if you find this doji at the end of a downtrend, then it's going to be a reversal up. All right, and if you find them at the end of an uptrend, then it means that it's going to reversal downward. Do you understand that now? So now look at the next one, is white marubozu. All right, My white Marubozu is bullish candle. You can see it is this candlestick is represented with white candlestick here. All right, it's also known as the green candlestick on the price chart. All right, so the white is representing green, while the black is representing the red. All right, the bearish. So the next one is black Marubozu. It is bearish. All right, it is just the opposite of white Marubozu. You can see it's a bearish candlestick pattern. All right, so then the next one, please take note of their shapes. All right, you can see the white Marubozu doesn't have any wick. You can see, can you see that it doesn't have any wick? Both white Marubozu and black Marubozu. So the next one is Ama. All right, we call them Ama because they are always found at the end of well, not only at the end of the downtrend, but mostly when they are found at the end of the downtrend, it means that there's going to be a reversal up. All right, they are bullish candlestick patterns, and you can see the way they are. They have a small body at the top, and they have twice lower wick as their body. So yes, for an AMA to hold, it needs to have at least twice the wick must be twice in length of the body. Can you see that? Can you see this, please? I'm moving on this red circle. So that's the you can see it's like a pin with a small body at the end of the downtrend. So it means that it's going to the market is going to reverse up, and can you see that it is already going bullish, going upward, a reversal. So the next one is hanging man. All right, hanging man is a bearish candlestick pattern. Actually, what you can do is, as you are listening to me, you can take out your note and tabulate, right, candlestick patterns. Then for the first column, write the title as bullish candlesticks, and the next one, write bearish candlestick. So you'll be able to understand and be able to assimilate those candlestick patterns that are bullish and the ones that are bearish, because it's very important to understand all these candlestick patterns, so that when you are able to see them, you'll be able to identify them easily, and it will it will help you to form your decisions with other tools. So hanging man is a bearish candlestick patterns. All right, as you can see it, just like it is drawn here, it is majorly found, or let me say, when it is found at the end of an uptrend, it's a reversal downward. All right, you can see the way it is. It has a very small tiny wick at the upper part of the body. Then it now has at least twice the wick. I mean, at least the wick is twice. I mean, the lower wick is twice as its body. Can you see it? So anytime it is being found at the end of the downtrend, of an uptrend rather, excuse me, anytime they are found at the end of an uptrend, it's going to be a reversal downward. All right, so the next one is inverted AMA. All right, inverted AMA is bullish. It is just the opposite of AMA that we talked up here. All right, they are just AMA facing up. All right, and they are also found at the end of a downtrend, the way it is. So anytime you see that, it's going to be a reversal up as well. All right, the next one is shooting star. Shooting star is bearish, and the reason why they call them shooting star is because the wick is actually also it must be at least twice. The upper wick must be at least twice of the body as well. So you can see they are facing the sun as if they want to shoot into the star. Sure, you get. And they are always found at the end of an uptrend. All right, so anytime you see them like this, sometimes their wick might even be longer than this, but it's at least for it to hold, for this shooting star to hold as a shooting star, the upper wick must be at least twice that of its body. Do you understand that now? So you can see anytime you see that at the end of an uptrend, there is going to be a reversal downward. So the next one is bullish engulfing. All right, known as bullish engulfing. Bullish engulfing is also a bullish candlesticks pattern, and what that means is that there's going to be a bullish candlesticks. All right, it's going to be one bullish candlestick at the end of the downtrend whereby it's going to the small red candlestick must be contained in between the white candles, the green candlestick, you understand. So when I mean white, I'm talking about the green candle. When I mean black, I'm talking about the red candle. Okay, so as you can see, for this bullish candle engulfing, for this bullish engulfing candle to hold, the white candle which formed at the end of this downtrend, it must be bigger. At least the previous black candlestick, the bearish candlestick, must be contained it must be contained in the bullish candlestick, the white candlestick. So that is, the white candlestick must be a bit taller than the previous bearish candlestick. So the way it is, please understand that. And whenever you see that at the end, whenever you see them at the end of the downtrend, then it's going to be a reversal up, just like it is here. Then the bearish engulfing is just the opposite of bullish engulfing. It's just the opposite. That is, the black candlestick must overshadow, let me put it that way, it must overshadow the small green candlestick at the end of an uptrend, so that the market is going to reverse downward. All right, so as you can see it here, you can see. Then the next one is the morning star. The morning star is also bullish. So for the morning star to also hold, there must be a bullish candlestick, which is green candlestick or white candlestick, and also a red candlestick, whereby there is going to be like a plus, like a plus candlestick in between both of them at the end of a downtrend. So anytime you see something like this, whereby we have a plus candlestick in between the white candlestick and the red candlestick at the end of the downtrend, is going to be a reversal upward. So we have the opposite, which is for bearish, which is known as the evening star. So the evening star is bearish, opposite of a morning star. So that one is now found at the end of an uptrend, whereby the red candlesticks and the white candlestick are joined together in between, having plus candlestick sign, all right, like a plus, all right, in between them. And whenever that is being found at the end of an uptrend, then it's going to be a reversal down. Then the next one is tweezer bottoms. All right, it's known as tweezer bottoms. Tweezer bottoms are bullish candlesticks patterns. All right, and as you can see them, we have two candlesticks, whereby one is white, one is black, but they have the same height, the same body, the same lower wicks. Can you see them? So anytime they are found at a downtrend, then it's going to be a reversal up. The opposite is tweezer tops. Actually, they are bearish. They are just opposite of tweezer bottoms. So anytime you find them at the top, at the end of an uptrend, just like the way they are, the same body, the same upper wicks, now there is going to be a reversal downward. Actually, they are not just found easily like that, like other ones, but anytime you spot them, please understand what they are. So those are the candlesticks, the major candlesticks that you need to understand, that you need to know, so that it helps you to form your exit and opening decision. So from there, I'll be moving on to how to draw support. Okay, before I go to the next subsection, let me just show you these candlesticks patterns on the chart, the live chart on Binance. So I'll be moving to that. Like I told you, the materials I told you needed for this class, you need Binance app, you need TapTrader, you need your mind to concentrate, you need a room whereby there won't be distractions, and you need ability to learn and to relearn. So all right, so we have the Binance pages. So I'll just head over to check BTCUSDT payout. Now good, as you can see, Good. Can you see this? What is happening here now in this 15 minutes time frame? This is what this one I'm clicking on is known as the bullish engulfing. Can you see that the red candlestick is actually contained inside the green candlestick? And what happens after then? A reversal upward. All right. And let me also see. Very good. Can you see this one? Can you see this one? This is what? This is a doji. Can you see that? It's a long leg doji actually. And what happens when it is found at the end of this downtrend? What happens? There is a reversal up. Can you see that? There's a reversal up and it moves upward until we have a bearish pattern here. All right. Then let's see other ones that we can find as well. Great. Look at this. This is what? This is evening star. Can you see that? This is what I just showed you the other time. This is known as what? The evening star. You can see the green candlestick in between the red candlestick and the green candlestick, and we have what? The plus sign at the end of, and that is what actually caused this reversal downward. Right. That is what caused the reversal downward. So let's see other ones that we can find. Look at this. There is this is an hammer here, and that's why we have a little bit uptrend here. That something also happens and it came down. Something must have also happened there too, but at least we have a little bit reversal up before it came down, before there's a bearish angle, bearish pattern. Then let's see another one we can find. Okay, this is bullish engulfing. You can see that this is engulfing the red candlestick, and we have a reversal up. And let me see, because of our time, just want to show you a few of them so that I'm trying to see if I can see a shooting star, but at least you'll be able to. Good. This is shooting star. Good. Can you see it? This is what? This is shooting star. You can see it is shooting the sun. That is why we have a reversal downward here. So when just go through them yourself as well, you'll be able to find them out. All right. So exactly, this is another shooting star, almost looking like a shooting star here, because it has a very long wick and almost twice of this body. So go through them. You will find a lot of them, because I don't want to spend much time on this video, so that I'll be able to cover everything in less than 2 hours. So I'll be moving on to how to draw support and resistance, and we're going to be needing tab trader for that. So here we are on tab trader. So now what is before I go into how to draw support, resistance and trend lines, let me quickly give you the definition of that. Support is just a price level, that is whereby an area where price has touched before, or let me say prices have touched before, so that it helps us to predict the next place or the next direction where price is actually going to. So both the support, resistance, and the trend lines help us to know or to determine the movement of price in the market. All right, and for you to, so now another name for support is known as the floor. All right, it's just like the floor of where you are presently, where you are sitting now, where you are seated right now. The floor, the place you're putting on your legs, is known as the floor, and it's known as what? The support. That's what is supporting you, isn't it? Aha. So, and the sailing and the resistance is also known as what? As the sailing. That is the part at which prices has reached and come down, that it has not broken before. So your selling is just the resistance is just like your selling, that is the upper part of your room, whereby there is a ceiling fan. You understand? There is ceiling fan, uh whereby when the time price gets to that place, it's always come down again because it is a resistance. It cannot break through it until it breaks through it, and that resistance turns to support. All right. So why the trend lines? Yeah, the trend line is actually a diagonal line. All right, just like the one I drew here. They are diagonal lines. I'm going to show you how to draw them later in this class. So but I'll be starting with support now. Now, for you to have a support line, you need to either support line or resistance line or trend line. You need to have at least three or more lines. You need to have at least three or more points, rather, not lines, three or more points. Let me say three or more price points to form or to draw your support, your resistance or trend lines. Now you can see I just didn't draw these diagonal lines, the trend lines here. I drew them in such a way that they are touching at least 3 points. It touched it here, it touched it here, it touched it here, and it touched it here. The same thing also applies here, 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 and okay, and here. From this place here, here, yeah, here and here. So at least I ensure that I touch like 3 points. So I'm going to be starting with support lines now, so that it will help me to form the support of this ETH USDT pair. So to do that, you come to this place. Let me show you where I click. You clicked on this pencil icon, then you click on horizontal line. Yes, support lines. Then you can change the color. I always like to use white for support and red for resistance. So now your support lines are your support and resistance line, they are horizontal lines, while the trend lines are diagonal lines. You understand what I mean by diagonal line? Just like the ones you can see on this chart already. So now I want to draw my support line. I will not just draw it. All right, so if I want to start from the bottom here, I will have to look for at least 3 points, 3 price points that it has touched, that this market has touched before. But when you are considering this, you need to consider the newest ones. For example, all these ones that are here, they are new than these ones at the back here. Sure, you get, these ones are old, though they still valid, but consider the most newest one. Now this one here on top here too, they are new than this one. So I can move this I can decide to move this my line up here now, so that it will meet this one. Are you getting it? But I want to start from the bottom. Sure, you get. So now if I want to draw this support line here now, I will have to, for example, I can decide to put this line here. So the only thing is just in that just let it touch the point. So if I put it, for example, if I put it here, you can see that I've excluded these two, this one and this one. So find a way that this line will touch at least all these lines here. At least one. It's not that it's necessary that it must touch all of them, but at least 3. So if I do it this way, it's still right, but I want it to touch this one here too. Sure, you get this line here too. So that's why I moved it up. But if I decide to do it like this, it will still touch at least 3 here. Sure, can you see that? At least it will touch three good lines here. You need to touch the tip. Yeah, no need to touch the tip. All right, you can see. But I want it to also touch the top one here. This one. Let me put this vertical line in here. Can you see? I want it to touch this place. So I will have to move this line back. Now can you see that? Or I can even decide to move it up to this place so that it can also touch this one too. Do you understand that now? So that's how to draw your supporter. So I'll put one here like this. I'll put one line here. Then I'll also draw another support line and move it upward now. change the color to white. So now I want to draw a recent one. So that means that I can decide to start from these ones, this green candlestick. Sure you get. If I want, you can see that the previous candlestick here, this one is not on it. So I can decide to move this line up now so that it can also touch the body of this candlestick. Let me move it up so you can touch the body of the candle. It's not having the previous candlestick to this one is not having a lower wick. So I'll just move it so that it touch, yes, like this. So that I touch the body. Good. It holds. Or I can even move it up so that I touch this one here too. Sure you get. Let me do that. So you just find a way that all this your support line will touch at least as many as possible. Yep, like that. That's another support line, a valid support line. Then I can also draw another one here, so that it meets it takes care of the recent or newest price point. Do you understand that now? So those are my supports, and I can still even draw one more line for support. Since this market is ranging presently, it is going in sideways. I can draw another one here, change the line to white. I can draw another one here. This is the recent the small red candlestick is the recent, so I can draw one here. Good. Can draw one. You only need a tip. Good. So I can draw my support like that. Now let's move to resistance. Let's use red line. It's also, we're also using horizontal, so I can do it this way. So I can start from here for my horizontal, for my resistance, using red now. So this is the first resistance. That is, anytime price gets to this place, it always drops down. All right, it always drops down. Can you see that? And anytime, that's the first resistance, and the recent one actually. And anytime it also gets here, yeah, to touch both of them. And anytime it also gets here, what happens again? The price comes down. Those are the newest resistance. Do you understand that now? Now the trend line, let me remove them and draw it again. The trend line is the diagonal line. All right, they represent the movement of the market. So now, as you can see, if I want to draw my trend line, we have to find at least 3 points on the diagonal line that this line is good. So you click on trend line. All right, this one, click on it. So as you can see, this market is going up and down, is ranging actually. But if I want to draw my trend line now, click on trend line, then draw it. So I want it to show me the movement of this line. So I will have to form my sorry, that's not how it is, because the way it is moving now, the price is actually sorry, coming, is moving in this direction. Yeah, can you see? It is moving like a triangle. So I'm having, let me try and see the, okay, so you can see it is moving like a triangle. So I will just try to get the points. Yep, I'll just try to get the points of this market. I only need a tip actually. Let me use white so you can see it clearly. So you can see I want to capture all these points on this diagonal line now. Yep, like that. Good. I think I got that. So now you can see I got this this line. Let me use this vertical line to show you 1, 2, 3, 4, 5, 5, 5, yeah, 5, and 6, these recent ones, even though other ones too fall. For example, this one fall in line, this one fall in line, this one fall in line, so all other ones fall, but the recent one, the most recent ones are that. So you can see that it is actually, this trend line is showing you that this market is moving in an upward direction now. But though it is moving in an upward direction, but the diagonal, you can even draw one more diagonal line to help you form a pattern, a triangle. Okay, because when we get to the pattern class, I will tell you that we have some patterns that we use to know the movement of a market. All right, for example, let's draw one more trend line to give us the direction of this market. Though we already know that is an uptrend, but sometimes it might break down, sometimes it might go up, but we want to be sure. How do we know it's going to be whether it's going to this market is going to continue to go in upward direction or it's going to come down? So that is when drawing another one more trend line helps you to know that using triangle. So now let me try and connect the tip of the resistance of the prices. Let me change it to white. Has it touched? Yes, it has touched this. Now, this type of triangle is known as the master triangle. Some people call it God triangle. I don't like the word God there. All right. That's why I changed it to master triangle. I actually decided to change to master triangle. I don't like giving anything God to just ordinary things. So I call it master triangle. All right. Now, what master triangle shows is that this price, since it enters into the triangle with an uptrend, then definitely this uptrend is going to continue. So what will happen now is that the price is going to break out here and it will continue to move in an upward direction. So if I want to trade this now, I will combine it with other things. I will to form my entry. So immediately this present price breaks this line upward, then it means that it's going to go in an upward trend, and then I will now form my entry immediately and then ride it to any of this resistance before it comes down, or try to see if there's going to be a double top and know where to exit. I'm still going to be showing you all that in the next classes, all right, probably in week 2 or week 3. So that is all about support lines, trend lines. Okay, let me show you one more way to draw trend lines. Let me see. Okay, let me go to another asset. Let me go to Bitcoin and show you. Hey, I have a lot of things here. Let me just find another. I have another things here. Let me just show you on. Okay, let's see TRX. I'm trying to look for a very good example that I can show you. Let me use let me see what Zeal is doing. Okay, good. This is another one we can use. Let me show you. Well, I have a lot of lines here. Let me just delete. Okay, let me turn them to white. They are those lines, all these red lines, they were once resistance. That's why you can see them in red. So they have turned to support. That's another thing you need to know. For example, okay, don't let me change it. Let me show you. They are not just, I didn't make them red though. They were, I used to let you know that resistance, I use color red for resistance. For example, let me show you where they have been what's it called, resistance. Good, look at it here. They are. Here they were. Now you can see they were resistance here. Can you see the support I drew here? Can you see the support I drew here? Now here these lines, these two red lines were what? They were resistance. But after the price, we have a double top here. After the price hits these two resistance very well, what happens? It broke out and we had another uptrend. So anytime price hits uh, the resistance in different times and we had a breakout. So once we have a breakout, this resistance, this previous resistance will now become what? Support. Please write it down. This resistance will now become what? Support. So that is anytime a resistance is being broken by price and there is a upsurge in price. Can you see that it went as high as 0.0988 something? So these previous support have now become what? I mean, this previous resistance has now become support. So I will change them back to white because they have become support now. So that is one thing about support and resistance. So let me show you. So for you to know that this guy is going uptrend, let me show you the trend here. Look at it. Can you see? So you have to find a way that it meets all these lines. Can you see that? So it is already. So if you come to this chart now and check, you can see this shows you that it's in what? In uptrend. So it helps you to know. Can you see? Well, that's why it actually broke this resistance and became a support. So you can see the trend line shows that it's in upward direction, isn't it? Now let me now move up. Now look at this. Look at this trend here. Look at this trend here. Look at it. Don't forget what I told you. Or let's use this place. If you don't want to use it, you can even use yeah, I think it's even better here. Yeah. So you can see it shows that it's in. Hey, I've moved it to. Let me set that. Well, yep. So now you can see it shows that what this market is in downtrend. Can you see? Can you see that it actually came down until it came back to this? Where is it? I'm coming. Okay, this is where it's broke out. Let me change it back to red so you know that where is, okay, this one, this previous resistance. Let me change it back to red. But don't forget, I've told you that anytime we have a breakout in resistance, the resistance becomes a support line. So now you will see what happens after this price went up from this previous. I wanted to change it to red. Excuse me. I wanted to change it to red. So that you will know it is. So that you will know that it is good. Now immediately the price broke this resistance, and it went up, and what happens? It came down back until it came back to this previous resistance. Can you see it? Until it came, can you see this price point? Until it came back to this previous resistance, which has now formed support. That was when the price now did what? It now went back up. So can you see now the previous resistance has now been, is now serving as what? As support here. So that's exactly what happened. And it came back until it came back, then the price now what? Started moving upward again, and here it came back, and you will see it also, can you see it came back to the, it came back to the resistance there, and even dropped more before it now started to reverse upward, and then you break it out again. Can you see it? Then here again it came back again and to the previous resistance, and from there it's now serving another support again, and it went up, and from there it came back to that same resistance. From there it now went up, it came back here again, and can you see that we are now having it as resistance, I mean as support here back again. So what now means that let me now draw the trend line for you to know if this price is going to go up or is going to come down. So trend lines actually help you to form can you see it? So if I ask you now with this trend line, what can you say? Let me use 1 minute to wait for what you're going to think about it. With this trend line I drew now, is this market in an uptrend or downtrend? It's very, very obvious. Look at it very well. Is it in an uptrend or downtrend? So if you had said uptrend, then you would have been right, because the price came down here and it shoot up back. So in as much as this price has not broken this support, it was resistance before, but it as much as it's not broken it down. So I will now change this line to white now, because it is serving, both of these price are serving as what? As support. Are you getting it now? So I can even move this line up here to touch this recent price, the green candle, and I can also move this one a little bit down to touch the recent price. Can you see it? To touch the recent price as a support. So touch this green candle here as the recent candle as a support. Good. Can you see that now? So what that means now is that we are now, this price is, I'm trying to delete small lines there. So we can see this is serving as what? A resistance, and this place too, a resistance. Yeah, let me change this to red so you know that it's resistance. Good. So now we will now wait when this price has now shoot up. When it's, you can see that it is still moving, right? So when it shoot, okay, let me change this trend line because of the previous because of the latest candlestick. I can change it to something like this. Don't forget, you must just touch only just 3. You only need 3. Yeah, can you see that? Good. So in as much this present candlestick has not come down, has not broken this trend line. Can you see that? So how many I have? How many? 1, 2, and 3 and 4. So it's still valid. Yeah, because it touches the trend line is touching at least 3, or in fact it's even more than 3. So it's still valid. So what this means now is that this price will continue to move up in as much as it has not broken this trend line I drew downward. Is that understood now? And anytime this price now broke these 2 red line up, and it came back for a retest, and it's, moves up again, then these both red lines will now turn to support. So you can go and check and book this thing down. This zeal is might shoot up in price once it breaks these 2 resistance up. But if it breaks this trend line downward, then it means that you might even come down. You might come down to this support here. All right. And if it breaks the support, then that means we are heading down to this previous resistance. Let me change it back to red. This previous resistance. If it breaks this trend line downward and it breaks these 2 supports as well, these 2 supports down, then you'll find the coin here around this place before another movement upward. I believe that this is understood. So okay, we are almost going to 1 hour. So from this class, I've been able to explain the support lines, which is serving as the floor of a price. Then I've also explained the resistance, which is also serving as the selling point of a price, and trend line, which is a diagonal. All right, we're serving as what? As a diagonal. This trend line, all right, serving as a diagonal. So it helps to show the movement of a coin. You can also draw another trend line on the upper part just to show you the movement. All right, just to show you the movement. Can you see? Just to show you the movement. All right, to show you the so you can see that it is actually the price is actually moving up. Good. So yeah, it's like a tunnel, right? Like a tunnel moving upward. So let me use this I'm looking for one tool here. Yep, I think this one. No, not this. I'm looking for a tool here. Not this. Parallel channel should be this. Yeah, this is. So you can see this is exactly what is happening now. So let me put it here so you understand what I'm trying to do. So can you see that? So it's actually showing you that price, so something like this. So it helps you to also know. So instead of using these two trend lines, I mostly use this sometimes rather quick, just to serving as a quick one. So if I don't want to, so I'll just check for the price point and put it there. So if I don't want to use the trend line, but because I was explaining trend lines, I had to draw it one after the other for you so that you understand. So you can see, so as you can see, it is showing what? An uptrend. So that is that on that. You can just rewind this since this is a video, you can rewind it to understand it better. You can play it at your you can go at your pace. So quickly I will be moving on from this to indicators. All right, getting started with indicators, understanding how to use indicators for entry and exit, then combine with other tools. That will be the next subtopic. So okay, let me still use this to explain. Let me just change it to where I have the indicators. So I will remove this guy now. I'll remove most of these things so you will be able to see the chart clearly. Let me remove, okay, let me just leave them. So now, talking about indicators, we have let me start with MACD. So indicators are just tools that help you to know the direction of the price. All right, and most of them are actually designed they are designed with either the price or the volume. All right, so for example, we have RSI, which is relative trend index. We have the stochastic indicator, RSI indicator. We have MACD, moving average convergence divergence. So I will start with MACD, which is known as the moving average convergence divergence. So now looking at this, you will see that MACD actually contains two lines. We have the MACD, which is the blue line. I'm talking about this blue line here, this one, this place I'm hovering on. This is the MACD. Can you see it? So we have two lines, and we also have a zero line. So this place, let me cancel this. This place I'm hovering on here, this line, that's this place that I'm touching now is known as zero line. All right, that has like histogram chart there is known as what? Zero line. All right, you can see that here you can, if you trace the line, if you trace it to this place, you will see that it is zero. While at the top we have positive, while below it the line we have negative. All right, so it's just like a number line in mathematics, whereby we have the negative hand side to be left, the zero line here, the zero separating both negative and positive, and the positive side. So now what that means is that, so that is what the zero line. So now we also have the MACD line, which is the blue line. The MACD line, which is this blue line. Then the red line is known as the signal line. So anytime, now listen to this, anytime the blue line, which is the MACD line, crosses over, all right, crosses over above, when we have a crossover like this above, it is known as a buy signal. All right, it is known as a what? As a buy signal. Anytime it crosses over, and if you look at what's happening here at the price point here too, there is what? There is a buy, there are bullish candlesticks there. So it is now what? As a buy signal. You can see what happens at the price section here too. We have bullish candlesticks, and the price is moving up. Can you see it? The price is moving upward. All right, the price is moving upward. So anytime it crosses, the MACD crosses over the signal line, the red line, all right, we have a crossover like this, then it's a what? It's a buy signal. And anytime we have the signal line now cross below it downward, like this too, is known as what? As a sell signal. For example, let me take you to this place. So look at this place now, where this MACD, can you see where it crossed below here? The blue line, MACD line, crosses below the red line. What happens? Look at the market. Let me show you. So what happens when it crosses it downward at the market? Can you see what happens? What happens? You can see there is a sell order. Sellers came into the game, and they sold it down until this place. Can you see it? Can you see it now? So MACD line is very simple. Anytime the blue line crosses over like this, when it crosses over, is a buy signal, and anytime it crosses below it is what? Is a sell signal. And anytime we have both of them under the signal line, and the MACD line crosses above it towards the signal line, is a very good buy signal. Because what this means is that, can you see the way this thing is moving? It will shoot out over the signal line, the zero line, and it will move into the positive area. So you can see it is in negative area now. So it's a very, very good buy for anyone who buys from this place. Assuming you have bought here, since this thing is in negative side, assuming you have bought here, then it means that it's a good buy, because the signal line will continue to move towards the zero line, and it will now shoot out upward. Do you understand? So that is what the MACD line is actually serving. Now I will move to RSI. RSI means relative strength index. It has it has a range between 0 to 100, and though this one is RSI 14, is a standard settings, but all other normal ones are they are just 13. And I've shown you in the free masterclass where I changed the RSI from 13 to 14. So instead of using 30 RSI, between 30 and 70, we are going to be using 32 and 68, because that's the standard one. All right. So RSI simply means that uh anytime this RSI is also known as a momentum oscillator. All right, it's known as momentum oscillator. It helps to measure the momentum of the price. All right. When we get to divergence class, I will show you what that actually means. For example, now this price here, it shows that the price might still go move up. This is higher low. So now let me continue what I'm explaining. RSI, anytime the price is in between 0 and 32 or 0 to 50, it's still a good buy. And anytime we have from 100 to 68, it is known as what? As a sell order. For example, this line is having a zero, this blue line now, this RSI line, this blue line here is having a 0, while this one at the top here is having as 100. So that's why we have 40 here and we have 60 here. Okay, so now what is going to happen now is that if you want to use RSI to buy or sell, you look for it when it is around 0 to 32 or from 32 to 50. So for example, let me see a very good buy place. This way is 40, is still a good buy. Let me find a place. Okay, good. Let me check this one. Okay, good. This is 34. Can you see it? I'm actually talking about this place. This way I'm looking at it. So because I selected this point, so it shows you that the RSI here is 34. And what that means is that you can buy this coin. And don't forget your candlestick patterns. So I'm not sure you get, but I don't want to combine that now. I just want to show you the meaning of RSI. So anytime the okay, let me explain this way. Anytime, let me go back to the top and explain. 63, looking for very top. Okay, this is 65. All right. Okay, let's use this one as an example. Now don't forget I told you 68, but sometimes we have to limit it to even 60. Yes, you have to limit it to 60, but though 68 is standard one. So anytime the price from 0 to 68 or 60 or 60, let's put it that way, it is time to sell. Look at what happens here. Sellers came into the game and started selling. Can you see after this green bullish candlestick, the next candlestick is bearish, and what happens? The price came down, and also from this place too, what happens? This price came down, and it came down to around this place. So anytime the market is around 60 and above, it is time to sell. That means that that coin has been what? Has been overbought. People have bought it, and the value, they believe that it is time to sell, that it has been overbought. It's just like when things are getting overbought, then people feel that they need to what? They have accumulated enough and they need to sell out. So once they start selling, then the price continue to drop down, and also on the RSI too, the RSI too continues to drop down until it gets to around 30, from 0 to 30. So you can see we have 35 here. Let me check this one. 40. What about this one? 28. Very good. This is an example. Can you see it? They sold all the way from this place. They sold all the way from this place around this 48 and sold it in to 28. Can you see what I'm saying? So when we now have it here, you can see it fell on top of our resistance, previous resistance, which has now turned to support. Can you see? That's when that's when that's when we now add another reversal up. Can you see it? So if you want to combine all these things together, and I will still tell you how to combine that, but let me just explain here. You can see we have 28 on the RSI, is a good buy. then it falls on our previous resistance, which has turned to support. It's also a good buy. Don't forget, because we have this resistance have been broken earlier before around at the back here. So that's another signal to buy. Then now looking at the candlestick patterns, can you see we have a bullish candlestick here, this green? Can you see it overshadowing? So though actually it started with this bullish candlestick, but this the bearish candlestick was too high, so this small candlestick actually is telling you that it's time to buy. And what happened after that? You can just wait for this next one to overshadow the previous green candlestick to enter. So it's another what? It's another group. And then if you look at the MACD, what's happening? Though it has not crossed, if you want to wait for it to cross, you actually come and enter here, which is also a good buy as well, because it rode up, 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 and up, and up, and up, and up until it gets to this point. So imagine that you have bought from this place. That would have been a massive profit. So that is how to use all these guys to combine this. So I've actually given you a very good explanation of how to combine all of them together, so I might not even explain that again, because it will just be like a repetition. So can you see how to combine them together now? So explaining RSI again, it's known as overbought. The market is known as overbought when the price on the RSI is around from 100 to 68, or even 60, using the standard one. Let's say 60, yeah, using the standard RSI 14. Let's say from 100 to 68 is overbought, and when it is when they start selling and the price gets down, all right, and the RSI is in between 0 to 32, it is known as what? As oversold. Then buyers will now come into game to start buying it again. So I will now move to Binance to show you the stochastic RSI, because I don't have the stochastic RSI here. So I will go to, can you see it? So now look at it. This guy has broken the trend line upward. What does that tell you? It tells you that you can see it has already broken the first resistance, the red line. Can you see it? So can you see what I'm saying? Since it has broken the first resistance, that means it might aim. So for you to conclude if it's going to break this red line, you have to wait for the close of this candlestick. Actually, we are in 4 hours, so we have to wait until this present candlestick closes. So if it closes and it closes above this trend line, this up trend line, then it shows that we might have a very good run up again. But if it closes below it, then it's still possible that it might still come down. So we have to wait for the close of this present candlestick, for you to make our decision. But still looks good for anybody who has I actually bought around this place. That was when I told you guys. I think I bought around, I can't even remember. I know I bought somewhere before this time, unless if I had to go and check that history. That's when I know the time I bought it. So, but what I'm just trying to tell you is that it's still a good business now as it is moving. So we'll try to see what happens at the end of the day. I will follow it up. So it might, the way it is moving now, it might actually go and hit this present red line here. All right, so we just have to wait. Okay, so let me just go to Binance and show you the stochastic indicator, which is the last indicator I'm going to be explaining in this class. ZIL, let's use ZIL because that's what I'm explaining. ZIL USDT. Let me even see the price I bought it. Let me check. Can't even remember. Okay. I will not want to do that now because I want to keep this information private. I'll just have to do it later. Okay, so now we are here. Can you see dildos here? Zeal is is going bullish. So let me change it back to this is known as Bollinger Band. Okay, another indicator is known as Bollinger Band. Let me explain this. Now on the Bollinger Band we have three lines. We have the yellow, which is known as the upper part. We have the what the light purple, all right, which is the middle band, and uh we have the deep purple, which is known as the lower band. All right, now the upper, anytime the candlestick is around this lower band, then you know that it has the potential to rise. All right, it has the potential, sorry for this, it has the potential to rise upward. But anytime it is around the upper part, can you see it is around the upper band here, it has the potential to do what, to drop in price. So even if you are just trading with just Bollinger Band and RSI alone, even with the MACD, wow, MACD has even crossed on the 15-minute time frame. Okay, so you can see we are already having a bearish candlestick here. It's forming a shooting star now, but let's see. Let me check the 1 hour time frame. Actually, this one is for scalpers anyway. Let me check. A doji is already forming a doji to shooting star. So let's see what happens. So now back to my explanation. Even if you are just using this is a very good example. Even if you are just using Bollinger Band and RSI and all these MACD, all these kind of indicators alone, combined with the action, the price action, like this one now. For example, what is showing you here is that it might come down. It might have a bearish pattern if it closes out like this. So probably maybe it will retest a support. Let me see the support. It might retest either this support or this support, or even probably this support before it moves up again. So either of those three supports, it might test it. So now so look at this example. From this place I'm hovering on, when the price gets to the upper band of this Bollinger Band, what happens? The price came down, it dropped until this place. Can you see it? And when it now came back into this place, what happens again? The price continues to increase until it gets to this place. So the reason why you can see this one now trying to form all sort of bearish candlestick, because it's already at the upper band. So it has two things can either happen. It can either have a swing high in such a way that this Bollinger Band here and here will expand. All right, can you see it? They will expand. Now, can you see what I'm saying? The way it is going up now, if it has a swing high like this one now, even more than this one now, this Bollinger Band will expand out, and you will see it climbing and climbing and climbing. So when it climbs even more than this the highest resistance here, then and it climbs to some extent, that's what we call swing high, then it will now try to retest this previous destination that is left. So if it retests it and it doesn't come down below it and it goes back up, then we're going to have a breakout. That's I will say so, a breakout when we get to the class. So that is that. So now coming to stochastic RSI. This is stochastic RSI. Stochastic RSI is similar to our normal RSI, relative strength index. So but what is actually happening here is that we have three lines for stochastic RSI. I'm talking about this one. I'm hovering on this one. All right. It has K. It has the value for K, has value for D, and it has value for J. Now, we have three different lines. We have the yellow, we have the light purple that looks like pink, and we have the deep one. This guy is is going bullish. So so as I was saying, anytime this yellow line, the K is the yellow, can you see it? Anytime this yellow line crosses above the D, which is light purple, can you see where it's in fact it can serve as the fastest, yes, it can serve as the fastest signal for you. For example, look at where it's crossed. Do you know that even MACD has not even crossed where it's crossed? Can you see that it is very, very timely? Yes, very, very timely. Look, look at the price. Look at the price at where it's crossed. Can you see that it is very, very timely for you, even more than the MACD? Look at the bullish candlestick there. After we have the supply absorption here. Yes, this is supply absorption. But after that, the next candlestick is bullish. All right. And what happens there? The next candlestick is doji, this green. And don't forget what I told you. Anytime we have doji at the end of the downtrend, what happens? There's going to be a reversal up. And what happens after then? A reversal upward. Can you see it? And we have a bullish engulfing here. Can you see what happens? So now, if you had used this stochastic RSI combined with this bullish engulfing here, engulfing this supply absorption at the price inside the Bollinger Band, then it's a very good, wow, this thing is going bullish, and it might even go past, it's almost there, it's almost, wow, it's almost going to go past it, though the resistance is dropping it back. The resistance is 0.07123, but here it almost gets, if it breaks this resistance, then wow, let me see, is it gonna break it? So the volume is actually still low, but let's see, that's why it has not broken it. If the volume is a bit higher now, it's going to break it off. Let me check that on Tap Trader. It is wow, it has broken it. It has broken the previous resistance. It has broke. Now we are going to have a very swing high. Yes, that exactly. Now let me show you on. Very good. Can you see it? It has broken both resistance lines. Let's load. It has broken both resistance. Okay, there's still another one here. Let me see. Horizontal. There's still another one here. There's still another resistance here. Let me change it to red so you see it clearly. Can you see what I told you? It broke my trend line that I drew out. So once it's broke it out, just like I told you, once it's broke it out, then it's going to hit both targets. And assuming we have entered now, our both targets has been broken. It has been hit. The first take profit is 0.06929. Then the next one is 0.07095. And the third one is let me see, the one I just put now is 0.07217. Now if this 0.07217 is also broken now, then we'll have to wait for this one. Let me show you this one here. Let me change it to red too. So if we wait for this 0.07275 to be broken and it breaks it, forget it, then it's going to make a retest. There's going to be a retest. Even the way it is now, it will retest. It will retest. And once it retests, it might go higher and higher. But don't forget, always draw your trend line to show you the movement, so you can see the movement is up and is going up. So I think I've been able to explain that. So anytime, okay, let me continue from the wow, wow, it's going bullish. Money is being made. That's why I told you guys to buy this guy for a long time. I have it, and I'm making profit already. So now um so talking about stochastic indicator, so anytime it breaks it upward like this, all right, anytime the yellow line crosses the light, the light purple, which is D, anytime K, the value of K, breaks the um the D, which is light purple, up, is a buy order and is a buy signal. And anytime it's break it down like this, you can see anytime it crosses over it like this down, is going to be a sell order, just like it happens here. Look at where it crosses it down. Can you see it? What happens is a sell order. So that is that. So I have also explained how this thing is still going bullish. Can you see what I told you the other time? Can you see that the Bollinger Band has expanded? Can you see it? Both upper limit and the lower limit as what they have expanded. Yes, it's going to create an avenue for this guy to move up and up. Can you see it? It's now moving up and up and up. So this thing is very simple. With my explanation, I think you have been able to get a lot of things in this master advanced class. Wow, we're in for a very good move. Wow, we're going bullish. Let me allow you to enjoy it. uh, let's see. This is sweet. If I had long this on futures now, it's going to be a very good profit. All right, I will not want to make this video to be more longer than this. All right, I would have loved to leave you to enjoy this move. Let me show you on this place. It has broken, probably it would have broken all the resistance. Wow, it has broken everything. Oh, it has broken everything. It has broken all the resistance. Can you see it? And we are even going more. Wow, this is a very good good bullish movement. So we are coming for this. We are coming for this resistance now. We are coming for this resistance, and if it breaks that too, then we might have another. It's coming down already. We might have another one here. So I believe you understood how it is being done now. That is why the practical aspect is very, very important. Though it will still come down, I think it's time to take profits. Let me find a way to go and take profits so I can re-enter the market again. So thank you very much. This is the voice of Awesome Mike. If you have any question, you can drop it on the WhatsApp group, and we are going to continue. I'm going to answer you. So I will just wait for these guys to be overbought. Let me see. The RSI presently is 64. It's already overbought, so I can go and take profit. So thank you very much. This is the voice of Awesome Mike. See you in the next week, God's willing, by the grace of God. All right. Bye, guys.